the law on credit institutions and the role of banking and finance lawyers. In the wake of Vietnam's amended law on credit institutions, banking and finance lawyers in Vietnam have become indispensable allies for clients navigating the complexities of compliance. The new legislation, which strictly prohibits banks from tying the sale of non-mandatory insurance products to the provision of banking products and services, marks a significant shift in the regulatory landscape. Banking and finance lawyers are pivotal in interpreting these changes, ensuring that clients not only understand the new rules, but also implement strategies that align with them. Update on the amended law on credit institutions. The amended law on credit institutions, which was recently passed, strictly prohibits banks from tying the sale of non-mandatory insurance products to the provision of banking products and services in any form. Disclosure of information on shareholders owning from 1% of charter capital or more. On the morning of January 18th, with 450 delegates voting in favor accounting for 91.28%, the National Assembly officially passed the amended law on credit institutions. Before the vote, the Standing Committee of the National Assembly (SCNA) reported to the National Assembly on several major issues that were considered, explained, and adjusted in the draft law. Regarding certain regulations related to cross-ownership, manipulation, and influence over credit institutions, there were opinions that measures to reduce the ownership ratio of shares and limit credit issuance had not resolved the issue of cross-ownership, manipulation, and influence as in recent times, with the importance being on the supervision of enforcement. The SCNA agreed with the opinions of the delegates, and therefore, in addition to regulating the reduction of the ownership ratio of shares and credit issuance limits, the draft law has been supplemented with provisions on the provision and public disclosure of information. In particular, shareholders owning from 1% of the charter capital of a credit institution (CI) must provide information, and the CI must publicly disclose the information of these shareholders to ensure transparency. The SCNA requests the government to direct the State Bank of Vietnam (SBV) to enhance coordination effectiveness with relevant ministries and sectors, and at the same time, to develop solutions to increase the effectiveness of inspection, audit, supervision, and to ensure the maximum limitation of cross-ownership, manipulation, and influence over CHIS. Regarding early intervention in credit institutions, regulation or a part of real credit institutions and dish that